Hi everyone, thank you for joining us for yet another economic data release, and today the topic of discussion is Eurozone industrial production PMI data. Now, industrial production in the Eurozone declined 0.1% in January. That is actually the revised data from minus 0.2%, despite predictions for a 0.6% rise following a 0.4% fall in December. Now, reading suggests the recovery is fragile in the euro area. On a yearly base, production increased 2.1%. Regardless of the 3 quarters expansion, the pace of growth hasn't exceeded 0.3% with a high unemployment rate and low inflation rate. Now, if we have a look at what some of the experts are talking about, we can actually have a look at what James Pisano, editor and analyst at capitalspectator.com, is stating, and he also highlights that the economic recovery in Europe is weak, but it's still alive. Judging by industrial activity, the annual trend has been strengthening in recent months, but the improvement is accompanied by heightened deflation risk, and so plenty of uncertainty continues to lurk over the macro outlook. No wonder that the US and the IMF are calling on the ECB to take more aggressive stance with monetary stimulus. Although some corners of Europe, for example, we do know Germany, that's doing quite all right and showing signs of improvement, the frail recovery is unbalanced and vulnerable if there's an unexpected shock. The markets anticipate an economic recovery, said the ECB executive board member earlier this month. At the ECB, we consider the recovery has already arrived, but we know it to be gradual and fragile. Now, deciding if that's still assuming too much in a work in progress and subject to revision each new data point. Today's main event is the industrial activity. Let us so have a look at what of the economists and analysts that were surveyed by Bloomberg are saying and predicting in terms of the indicator and the potential estimates. So here we go. Overall, 32 economists were surveyed. I hope you can all see the figures clearly. And the overall 32 economists were surveyed. Here are 10 of them with their estimates. The median estimate and the average estimate is 0.2%, high being 0.5%, while the low estimate 0.0%. Breaking free of the negative micro forces will take time, even under the best circumstances. Again, the already quoted ECB board member said the degree of slack in the economy is very high and is unlikely to be closed in the Eurozone before 2017. Yes, another ECB board member warned last week. If we also just have a look and discuss what Dukascopy community members and traders are saying about the upcoming data release, then what we can mention is the potential impact on the most traded currency pair, Euro-USD. So we have it here. We have the data saying that overall 51 versus 49%. 36 believe that the impact will be bullish, while 34 believe it will be bearish. So overall, there's not really that much consensus on what's going to happen in the markets. Overall, it's quite dubious. We can also have a look at the comments that were provided by a community member who suggested the impact will be bullish or bearish. In terms of bearish, we see that Lalore says recovery is still fragile in the euro area. The pace of growth hasn't exceeded 0.3%, and with a high employment rate and low inflation, the industrial production cannot climb much. The consensus forecast is 0.3%, but I'm expecting the reading to be lower. Mik is saying the impact will be bearish, definitely, so feel free to type in the public chat your comments to support the view, and we're also going to have a look at another comment that says the impact will be bearish, and why is that? Well, Carper says data with low volatility expected. At the same time, will also be released a variety of important data. We have the industrial production month on month, which has good expectations. So he believes the impact will be bullish. Okay, now that is all for the time being in terms of the fundamental aspects. If you have, guys, any your forecasts or ideas, do feel free to type them in the chat. In the meantime, I give the word to Alex to have a look at the upcoming data release from the technical aspect of things.
Because I have some problems with my computer, therefore I was forced to use Thomas' computer, and I hope he really doesn't mind. So today I'll be speaking about the potential positive surprise trading strategy, which will be based on the most traded currency pair. And even though I see that the sentiment is strongly bearish, as vast majority of traders believe that the data will surprise markets to the downside, still the consensus forecast still stands for the improvement. And therefore, we will be discussing the potential positive impact of the Eurozone industrial production on the Euro-USD currency pair. So, first of all, I would like to point out that industrial production data has relatively small impact on the markets, as we see that during the last 5 months, the average market reaction was around 5 pips, so not really impressive. And the event does not really represent a quite attractive news release to traders, but nevertheless, the potential positive surprise trading strategy includes the entrance point at the market price as always, and currently the price stands at 138.23. Sorry, regarding the potential stop loss. So as you can see, just recently we have observed a massive sell-off of the Euro-USD, and actually the potential stop loss is placed at, sorry guys, just a second. So the potential stop loss is placed at 138.19, and that will be a 4-hour support. And I would also like to point out that on the daily chart we see that at 138.15 we're having a weekly and monthly pivot. So that will be a key level for short traders. Obviously, just a couple of pips left till the price will reach this level. Regarding the potential take profit, it's a little bit more complicated. As you can see, first of all, we have placed it at 138.39. However, I guess it would be too optimistic keeping in mind the average market reaction. Therefore, I guess we need to adjust the trading strategy and place the potential take profit around 138.30. That will be just 9 pips lower than the previous target, and this level is represented by another 4-hour support. So in pips, that will be still, I guess, rather optimistic. Yep. Regarding the market sentiment, as already mentioned, it's still strongly bearish, as vast majority of traders are holding short positions, meaning that they expect the single currency to depreciate versus the versus the greenback. And we see that almost 68% of open positions are short. Meanwhile, the single currency is sold in 62% of all cases, while the greenback is bought in 67%. Moreover, we see that traders expect the pair to continue its depreciation in the medium and longer term perspectives, as slight majority of pending orders in the 50 and 100 pips range are placed to sell the pair. And what is more important, here we see that traders at one, the daily FX and Saxo Bank also believe that the pair will depreciate. But nevertheless, technical indicators support the case that the pair will continue appreciating in the longer term, as we see that indicators on the weekly and monthly charts are sending buy signal. Once again, expecting that the single currency will continue climbing higher against the greenback. But I would also like to point out that in a short and medium term, the pair is expected to move sideways according to technical indicators. So I guess the data should be probably already out. And the pair is still trading at 138.16 and continues depreciation. So the recommended stop loss was obviously already breached. Yeah, as already mentioned, the pair is approaching weekly and monthly pivot, which is located at 138.15. and just recently the pair has touched the level. So see that industrial production came at 1.6%, unchanged from the previous month. Yeah, but still, just pretty impressive figures. So I would also be really grateful if my colleague will be able to place annual figures as well. So, but nonetheless, the initial market correction was really moderate, and we see that the pair was almost unchanged. Yeah, on the annual basis, we see that industrial production came at 8.1%, also unchanged from the previous month. So it's not really surprising that the markets are still trading around the same level. Yeah, I guess that will be all to the news release. However, just to conclude, I would like to point out that on a daily chart, the pair is still trading in boundaries of the rising wedge pattern. And as already mentioned, bears are trying to push the pair to the monthly and weekly pivot at 138.15. However, long traders should obviously focus on a recent high, just like above 139 level. Yep, I guess that will be pretty much from my side. Yeah, hope that was still useful for some of you, and I'm giving the floor back to Gita.
Thank you very much, Alex, for your contribution to the technical aspects, and that is indeed very surprising figure. So hopefully, it is the fact that Europe's economy is in a way to a full recovery. But in the meantime, that is all for now. Be sure to tune in today at 12 GMT for our Dukascopy research webinar. And until then, have a great day and see you soon. Bye bye.